Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. Students, in the previous class we have started a new chapter that was financial statements or statement of a joint stock company. Under that we have studied the meaning of financial statements, types of financial statements, nature of financial statements, then objectives behind preparation of financial statements. In today's class, I will take up the format of a balance sheet, that is a financial statements, that is a balance sheet and statement of profit and loss. I will prepare it. I will see what are the items that should be there and how to present the balance sheet and the statement of profit and loss in today's class. Okay. So, format of balance sheet of a company. So, first of all, we will write the heading, that is a balance sheet as at 31st March. Balance sheet as at 31st March. Because financial statements are prepared at the end of the accounting year, and accounting year starts from 1st April and ends on 31st March of the next year, right? You know the concept. So, March 31st March dash dash dash, maybe 2020, 19, 18, whatever the year you can write, but you should prepare as per the instruction given in the problems. You cannot do as you like, right? So, first you have to write the name of the company here. Name of the company, maybe ABC Limited. ABC Limited. I'll write here dash 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 company limited. Limited, that you have to write. Then it is not T form balance sheet. I told you in my previous class, as per Schedule 6 of Companies Act 2013. Under Schedule 6 of Companies Act 2013, a new format is given, that is we call it as a vertical balance sheet and not T form balance sheet. Here we write all the equity and liabilities first, then we will write assets, and there will be total for each of the assets and liabilities, isn't it? Then the total of both should match each other. That is what we will do here. So let us start. There should be particulars column, then note number, particulars, then note number, then comes figures at the end of current reporting period, figures at the end of current reporting period, that is nothing but current year figures, that's all, very simple. Then figures at the end of previous reporting period. This is the format of that is a balance sheet of a company. So that is what you have to do. Draw the lines. No debit credit. Remember friends, this is not an account at all. It is a statement of assets and liabilities. So you must be very careful regarding this. First one, let us write what are the items that are to be displayed, isn't it? Before that, let us draw this line. Yes. Here, first one, equity and liabilities. Equity and liabilities. Equity and liabilities. And liabilities. Under that, one by one you have to write what are the items that are covered under equity and liabilities. First one is shareholders fund. First one, shareholders fund. Under that, share capital. Share capital. Then point B, reserves and surplus. Share capital. Point B, reserves and surplus. Reserves and surplus, isn't it? Then money received against share warrants. Money received against share warrants. Received against share warrants. Share warrants. So these are the items that are to be displayed under equity and liabilities. Then second point is share application money pending allotment. Share application money. Application money pending allotment. Pending allotment. Isn't it? Third one, non-current liabilities. Let me explain what are the items that are. Shareholders fund. Friends, here what we will do is we will show different types of shares. That is equity shares or preference shares. What are the shares that are issued to the public? That will be displayed under this. That is share capital. Share capital means equity and preference both are to be included here, should be shown separately under share capital. That is what we have to do. Then reserves and surplus. Reserves and surplus, it includes different types of reserves like capital reserve, securities premium reserve, capital redemption reserve, or debenture redemption reserve, revaluation reserve, or other reserves. And then surplus, that is the balance in statement of profit and loss, which is a profit, isn't it? All these comes under reserves and surplus. That is accumulated profits and reserves should be shown under the reserves and surplus. All the items may not be there, but one or two items may be there, or they will give simply reserves and surplus this much amount. Remember friends, in this chapter you are not supposed to prepare 12 marks solution. They will not give you 12 marks problem. They will give you only 6 marks problem here. What you have to do is either they will give the items of balance sheet, or they will give you the items of statement of profit and loss. That is profit and loss account, what you call under, that is the trading, that is sole trader, isn't it? Sole trader, you are preparing trading and profit and loss account. Likewise, we prepare here statement of profit and loss, which is actually profit and loss account of the company. Here, what we have to do is we have to show the item under each of the heads, then simply displaying and writing the total. That's all. We need not have to prepare a lengthy statement or something like that. No, it is not like that. Only 5 or 6 items will be given. Sometimes 4 items will be given, and under which one you have to prepare calculations. For that you have to prepare a separate note. Note means very simple. Drawing the columns, writing the items. Suppose employee benefit expense or share capital. Under that equity share is there, preference share is there. You can prepare note for that. And remember friends, you need not give serial numbers for each of the, that is share capital only, or note number 1 should come. For share application money pending allotment, note number 2 should come. It is not like that. Whatever note you prepare, you just number it serially. That's all. There are no hard and fast rules that you have to give number 3 only for equity share, that is shareholders fund. No, it is not like that. So any number you can assign, but it should be serially numbered. You should number it serially. Suppose employee benefit expenses like salaries, wages, or provident fund, insurance to employees, group insurance, isn't it? All this comes under employee benefit expenses. So if there are 3 items, what you have to do is note number 2, employee benefit expenses. Then you have to write all the 3 items together. In inner column you have to write the amount, and total should be written in outer column. That's all. And here you have to write under employee benefit expenses, not in this. This is a balance sheet. It comes under statement of profit and loss. Okay. So similar, the same thing holds good there also, here also. So you have to write note number 3 here. Whatever note number we will give here, this is the note number column. Note number we will write here. Note number 2. Employee benefit expense we will write note number 2, and we will write the straight away we will write the amount. That's all. If previous year figures are not given in the problem, most of the times they will not give you the previous year's problem. There is a figures, only current year figures will be given. So during that time, don't avoid this column. Prepare this column, write there figures at the end of, that is a previous reporting period, and don't write the amount. That's all. Amount is not given, so leave it blank. Write only current year's figure and write the total. That's all. Clear? Yes. Then money received against share warrants. What do you mean by share warrant? Share warrant is very simple. It is like a share certificate. It is, isn't it? The person who is holding suppose 500 shares of a company, the company will issue a certificate that this person is holding this much of shares in our company. That is called share warrant. Nothing but that is a certificate issued by the company confirming that the person is holding, the shareholder is holding this much of shares. So money received against share warrants, that is how many, that is share warrants have been received, the amount is received against share warrants by issuing share warrants, how much money is received, that should be shown under this. Share application money pending allotment. Allotment is pending, application money is received. That is called share application money pending allotment. Till the allotment is not done, we cannot transfer this amount to allotment account, isn't it? So once we allot the shares to the shareholders, we will communicate to the shareholders from whom the applications were received, and then we will communicate to them, and then this money will be transferred to the concerned account. Till then it remains pending. That is share application money pending allotment. Let us move on to the next part of balance sheet. Non-current liabilities. Non-current liabilities. Third one is non-current liabilities. Non-current liabilities. Under that, long-term borrowings. Long-term borrowings, that is long-term borrowings means borrowed, company borrows amount or company raises amount, the term of which is more than 1 year. That is long-term borrowing. If the borrowing by the company of which the term of returning the amount is more than 1 year, then it is called long-term borrowings. Mostly long-term borrowings, that is debentures, bonds, all this comes under long-term borrowings. Mostly debentures comes under this because debentures are always long-term borrowings, correct? Yes. Then what else? Next one is deferred tax liabilities net. Deferred tax liabilities. What do you mean by deferred tax liability? I think a new term for you. Actually, this has no implication on our preparation. They will straight away give deferred tax liability. This much you have to place it under this. But still, you should know something about what is deferred tax liability, right? So let me explain it. Takes time. I will take up this part here. Fine? Yes. Remember, first basic thing is that accounting and this is financial accounting and taxation accounting both are different. Both are totally different. taxation accounting is prepared for tax purpose only, and the financial accounting is prepared for our purpose. We prepare books of accounts, isn't it? So here I will bifurcate this financial accounting and taxation accounting. Let us assume I will take the figures for 4 years. Clear? We purchased an asset of worth rupees 1 lakh. I will take 1 lakh worth asset. Clear? 1 lakh worth asset we have purchased during first year. Now, as per financial accounting, we are charging depreciation at the rate of 50%. Depreciation at the rate of 50%. So first year depreciation amount comes to how much? 50% means 50,000. Am I correct? So how much is remaining as revenue? How much revenue remains here? 50,000 is our revenue for the first year. First year revenue. Let us assume taxation at 50%. 50% tax. Fine. First year revenue is 50,000, 50% taxation. So 25,000 is the amount of tax paid by us. 25,000 is the amount of tax paid by us under financial accounting. Second year again same situation. 1 lakh is the value of the asset bought. We are charging depreciation at 50%. Revenue is 50,000. 50,000. Correct. 50,000 during second year. What is the tax again? During second year, tax rate will be again 50%. Second year, tax will be 25,000. 50% of 50,000, right? Third year again, 1 lakh is the asset value. Is there any depreciation to charge? No depreciation to charge, because 50,000 plus 50,000, 1 lakh depreciation is already charged, isn't it? So 1 lakh here, no depreciation. So the net revenue is 1 lakh. Net revenue is 1 lakh. Third year it is, right? How much is the tax? 50%. So 50,000 is the tax this year, because there is no depreciation. No depreciation to charge. Fourth year again 1 lakh minus no depreciation. Total revenue is, net revenue is 1 lakh. 1 lakh. This is the fourth year, and the tax amount is again 50,000 during fourth year. This is under financial accounting. Let me calculate under, that is taxation accounting, right? So 1 lakh is the value of the asset. Then here tax law will not allow you to charge depreciation for more than 25%. More than 25% tax is not allowed, depreciation is not allowed to charge. The firm should charge a maximum of 25% depreciation on the asset, not more than that. Then what happens here? So 1 lakh is the value of the asset. Correct. Value of the asset is 1 lakh. The depreciation can be charged to a maximum of 25%. So depreciation comes to 25,000, 1 lakh into 25%. Correct. So during first year, the revenue will be 75,000. 75,000 is the revenue during first year. Correct. And tax rate is same, 50%. So 37,500 is the income tax to be payable. Tax to be payable, corporate tax to be payable, isn't it? Then during second year, again 1 lakh rupees. Correct. Tax should be 25,000, 25%. Remaining amount is 75,000. This is second year. Second year. tax is 50%, 37,500 again. See the tax amount, 25,000 here, 37,500, here again 25,000, here 37,500. Then again during third year, again 1 lakh. Here, how much depreciation we have charged already? 25 plus 25. First year 25, second year 25, total 50,000. Still the value of asset is 50,000. Am I correct? So, deduct again 25%, 25,000. So here, how much remains? 75,000 again. So 50% tax means it becomes during third year also you are paying 37,500. During last year, again 1 lakh is the amount of asset, value of asset. You will charge depreciation at the rate of 25%. So it comes to 25,000. If you calculate now, during first year you are charged 25,000 depreciation, second year again 25,000, third year again 25,000, last year again 25,000. Total it will be 1 lakh. Now the asset has become scrap. Am I correct? Now what is the amount remaining? That is a profit. Profit is 75,000. Revenue is 75,000. After deducting depreciation during fourth year, deduct tax. Tax will be 50%. So it will be 37,500. 37,500. So here you can see the tax amount to be payable under financial accounting and taxation accounting. Am I correct? So this is the distinction. 25,000 here under financial accounting, you are deferring the tax. You are deferring the tax, that is called deferred tax liability. Here you have to pay actually 37,500, but you are paying 25,000. So this is called deferred tax liability. You are deferring it, isn't it? And here again when you reach here third year, 50,000 actually you are paying, but actually how much should have been paid? 37,500. Correct? This is deferred tax asset. Deferred tax asset. So this is about deferred tax liability and deferred tax asset. You are creating the asset here. Am I correct? By charging more depreciation here, you are creating asset to the extent of 12,500. Isn't it? So that is what you are doing here. So this is called deferred tax asset will come later under assets. So you got the concept very clear, right? That is a deferred tax asset and deferred tax liability. I think yes, I'm sorry. It is 25,000 we have paid, but we are supposed to pay 37,500. We are saving 12,500 here. This is deferred tax asset, and this is deferred tax liability. Very simple. Clear? Yes. Now let us move on to our original part, that is deferred tax liability. I already explained. Then comes here other long-term liabilities. Other long-term liabilities. Right here only. Yes, students, deferred tax assets and deferred tax liabilities. Now, other long-term liabilities. Other long-term liabilities are like the loans borrowed or any other fund raised by the company, or the term of which is more than 1 year. That comes under this other long-term liabilities. Then long-term provisions. Any provisions that are made, point D it is, long-term provisions. C is other long-term liabilities. Then last one is, that is a D, long-term provisions. Long-term provisions. That is the provisions made for a long term, isn't it? More than 1 year. Or a provision which is made to acquire a capital asset comes under, that is, long-term provisions. Then next comes fourth one, current liabilities. Fourth one is current liabilities. Current liabilities. Under that, what are the items that may come? First one is short-term borrowings. Short term borrowings means the borrowings, the period of which is less than 1 year. We have to return that amount, we have to settle that liability, we have to set off that liability within a period of 1 year, not more than 1 year. That is called short term borrowings. Then trade payables, that is actually amount payable on account of the business, day-to-day business, whatever we are doing with the suppliers. Amount payable to suppliers, the period of which is less than 1 year, isn't it? While during doing the ordinary transactions, then any that is liability arises which is payable to the creditors or suppliers, then it is called trade payables. Other current liabilities, under that is the second one, other current liabilities like maybe short term loan borrowed, bank overdraft, all these comes under other current liabilities, right? Then short term provisions are created for a period of not more than 1 year. Any short term, that is obligation we want to meet, for which liability is created, that is provision is created, like provision for doubtful debts, isn't it? That comes under, or any other taxation provision of a period of, for a period of less than 1 year comes under this, that is current liabilities. So these are the 4 items, but it is a practical oriented question also, this one. Prepare a company balance sheet with heads only, main heads only, then you need not explain these sub items. Some simply main headings like shareholders funds, then share application money pending allotment, non-current liabilities, current liabilities, that much if you write it is enough. Clear? If they mostly they will not give you to assign imaginary figures. If it is assigned, then you have to assign imaginary figures, otherwise no need of that is assigning imaginary figures. Simply you can put XX in amount column, or need not put anything, simply write the items only in the particular column. That's what you have to do. Clear? It will be asked for 5 marks, practical oriented question. Clear? Let us move on to the second part, this other one, assets. We will write here only. After writing the total of that is liabilities, then we will write Roman 2 assets. We will take up here only assets. Under that, first one, non-current assets. Non-current assets. Very simple, friends. Non-current current in the sense they are long-term assets, fixed assets. Both tangible and intangible assets comes under this. That is long-term assets, tangible and intangible. Like tangible assets like building, machinery or furniture, all this comes under tangible assets, can be seen or touched. Intangible assets like goodwill, trademark, copyright, patents, all this comes under there is a intangible assets, and both comes under the non-current assets. Non-current means fixed. Then that is a fixed assets, under that tangible, intangible. Then capital work in progress. Capital work in progress, third one. Capital work in progress. What do you mean by work in progress? WIP. That is, asset is not completely done, but it is under construction, or it is under manufacturing. That is called capital work in progress. Like we are constructing a building, isn't it? Till the building gets completed, we cannot assign any fixed value. That is, we will not come to know how much is the cost of the building, isn't it? After construction only we will come to know how much is the cost of that asset. So if the building is under construction and the approximate cost of the building is maybe 50 lakh and we have already spent 30 lakh, then that amount will be shown somewhere in the balance sheet, right? Because it is also the amount spent by the company. We have to show where the amount is spent, on for what purpose we have spent that amount, and where we will place that amount in the balance sheet. So this is where we will place such items which are not fully developed or prepared but under construction or progress. That is called capital work in progress. In case of manufacturing industries also, that is when we manufacture products, isn't it? Some items, some raw materials may be partially finished, maybe on the machine, or half part is completed. Goods are manufactured, but packaging is not done. Till you do the packaging, you cannot sell in the market. Take the case of biscuits. Can you sell the biscuits in loose condition? No. Without the wrapper, you cannot sell the biscuits, isn't it? Only the customer will open the wrapper. Otherwise, it gets the quality of the biscuits will gets deteriorated, or it will absorb the moisture and it will become like a cloth, and you cannot sell it as a biscuit. You have to sell it as a cloth only, isn't it? So that will be the condition. So here in the same way, till the asset is not completely manufactured, or goods are not completely manufactured, we categorize them under work in progress. So raw material, semi-finished goods, finished goods. Semi-finished goods comes under work in progress. In the same way here, partially finished, that is asset, partially completed assets, they are coming under the capital work in progress. Remember, friends. Then intangible assets under development. Let me give you best example. We are going to manufacture a new product, for which we need, that is a copyright, or we are going for, that is a trademark, isn't it? Trademark is not registered. We are working on that. We have already spent money on that. Those expenses which are incurred to develop that trademark is nothing but that comes under, that is intangible assets under development. Intangible assets under development. So it should be mentioned under that particular part. Then now point B, that is non-current investments. Non-current investment means the investment made by the company which the term of which is more than 1 year. If it is invested for a period of more than 1 year, we categorize them under, that is fixed investment or non-current investment. Non-current investment, the term of which is more than 1 year. Deferred tax assets, I have already explained with illustration, with example, right? You know it very well. Then next comes long-term loans and advances. Long-term loans and advances, nothing but loans and advances given to maybe the employees, or maybe to the customers, isn't it? Sometimes we have to give a loan to them also. So that is that comes under, that is long-term loans and advances, more than the term of which is more than 1 year, isn't it? Other non-current assets, anything for that matter which has the period of which is more than 1 year, which can be used for a period of more than 1 year, comes under this category. Then current assets, current investments, no doubt, investment made by the company, the term of which is less than 1 year, less than 1 year. Then point B, inventories. Inventories is nothing but the goods, raw materials, semi-finished and finished, all comes under this inventories. Inventories means the amount invested in the raw materials, semi-finished goods, and also in the finished goods. Then trade receivables, like trade payables, in the same way the debtors, isn't it, to whom we sold goods on credit basis, they are supposed to pay money to us, we are supposed to receive money from them, comes under, that is trade receivables. That is any amount which was supposed to be receivable on account of trade, isn't it? That is called trade receivables. Mostly bills receivable and debtors comes under this category. Cash and cash equivalents. Cash and cash equivalents, that is a hard cash which is lying in the treasury of the company, or any overdraft or bank balance that is there in the bank, isn't it? So which is in liquid form, or the security or anything that can be converted into cash very easily with a short notice will come under this cash and cash equivalents. Cash and cash equivalents. Short-term loans and advances. The loan given, isn't it? loan given with the term of which is less than 1 year. Mostly the loan given to the debtors or whatever it is comes under this category. Then other current assets, that is the asset which has a life of less than 1 year. Less than 1 year comes under other current assets. With this, your balance sheet comes to an end. I explained almost all the points under this. Now we'll move on to the statement of profit and loss in the next class. So students, what you have to make sure that format of the balance sheet, I will send it in the WhatsApp, isn't it? I will upload it in the group along with the theory. Just make a note of those things, and this is one of the, that is a practical oriented question, balance sheet format or statement of profit and loss, isn't it? So you have to make sure of those items. Only the thing is that here understanding the meaning is secondary. First you have to know under which category we have to place the item. So for that you should know the meaning. Am I correct? So I gave all the that is explanation for each of the items in the notes that will be uploaded first, then we will dispatch the problems later. So make sure which item comes under which category, because for each of the items you place, you will get 1 mark. There will be hardly 4 to 5 items, and for 1 or 2 you have to do calculations. For calculation you will get 2 marks, and for placing the item under each category you will get 1 mark. So like the 6 marks will be there for the solution. Clear? Take down assignment. Mention the items. Mention the items that are written under shareholders fund. Written under shareholders fund. Submit assignment on time. Thank you for watching this video. Thank you.
Don't forget to like our video and subscribe our YouTube channel for all the updates.